Hey everyone, the last few weeks were looking really good for a breakout higher in Bitcoin, but then late last week that key level gave way and Bitcoin dropped below 80,000 bucks. Why that happened, what could come next, and which levels matter now, I'm talking about in the next few minutes with Oliver Michel from Tokentus. Great to have you here.
Hi, Jonna.
Would have been a lot nicer if the 80K level had held. Last week it slipped below and we still kind of hoped it was just a quick dip, but the weeks started off negative again. Are you expecting more downside or another shot at that round $80,000 mark?
Yeah, it would have been great if Bitcoin had pushed straight through that 80,000 area. That definitely would have calmed a few nerves, but the correction we're in right now isn't that bad. It's not the end of the world. It's basically normal. The only thing we've got to ask now is, how far can this pullback go before it starts to threaten the little uptrend we're in? And that's what we want to look at in detail today.
Let's first take a look at what's going on in the US, more specifically the economy and of course the Fed Watch tool, so the market's expectations for the Fed. Things are kind of shifting right now, especially around who's running the Fed. And we also saw the Middle East conflict isn't just pushing oil around, it's lifting prices overall. And that showed up in last week's US data too. We got CPI and PPI last week. You probably pictured the Fed chair, old or new, looking a bit better than this.
Yeah, you're absolutely right. I mean, Kevin Warsh isn't exactly inheriting an easy job if he's supposed to cut rates and then gets inflation numbers like these dropped on him in his biggest week. That's rough. Let's look at the PPI first. That's the producer price index, basically the price a producer sells a product for into the supply chain. And you can see it here. PPI, 4.0% last month, 4.9% was expected. So yeah, people figured things would get a bit more expensive, but it came in at 6.0%. And if you look at core, so excluding food and energy, it's naturally a bit lower because energy prices are a big driver. 3.8% last month, 4.3% expected, and it hit 5.2%. That's a total shocker. And now that whole chain keeps going because those higher priced goods move through the distribution channel with distributors and markups until the end consumer buys them at the end of the line. And you can already see prices moving up here. 3.3% previous, 3.7% expected, and it came in at 3.8%. And even without food and energy, it's ticking up from 2.6 to 2.7 to 2.8. And once this wave rolls from producers to consumers, we'll soon see even higher percentages up here, in the CPI too. That's pretty clear. Inflation's in full swing. You teed it up earlier with the US-Iran conflict. It's shot up to these levels so fast, and you fight inflation by hiking rates. And that's exactly what our Fed Watch tool is showing now. We're still in this range, and we really expected. And that expectation was pushed onto Kevin Warsh by Donald Trump that rates would be cut. But you can see here, the market expects a first hike on March 17th, and then that basically sticks through year end. I mapped it out through December 8th, that's all the Fed meetings. Through the end of the year, there's no Fed meeting left in May. So Kevin Warsh will chair his first meeting on June 17th, and then we'll see what comes next. But do we really have to wonder? If you look at these inflation numbers, he doesn't have much of a choice.
Yeah, and of course he's got Donald Trump behind him saying, I want rates cut. And in front of him, he's got these economic numbers basically begging for a hike, and he's stuck in the middle. But first he has to even start. We saw that Kevin Warsh, the new guy at the top of the Fed, was basically locked in last week. He'll be sworn in next Friday, and like you said, he'll run his first rate meeting on June 17th. The big question in this messy situation is, what kind of move can he even make with this inflation and with a US administration? Yeah, even if the Fed is independent, the administration is clearly pushing for big changes, like we already saw with Paul in the last term.
Well, I've got a comparison in mind that I'd really like to see if it were doable in practice. We've been watching Gary Gensler for years now, how he ran the SEC and more or less tried to wreck the crypto market. And then Paul Atkins came after him and did a total 180, basically threw the doors wide open, was pro-crypto, and really put the SEC, and that's a shop with several thousand employees, on a track. That helps the market across the board before all things are crypto market, and I'd love to see that kind of impulse from Kevin Warsh too, that he steps in and tries to support the markets, whatever that looks like. And he puts his stamp on the Fed, and that's one of the most important institutions worldwide. And then, in that sense, the Fed pumps capital into the market because it's needed, and maybe he can even get the board to move the rate lever against all expectations.
Sure, and interest rates aren't the only tool Kevin Warsh has. He could also tweak the liquidity dial a bit more overall to add some support. Bottom line, there's definitely going to be a different vibe, even if Jerome Powell isn't at the top anymore, but is still on the Fed board.
He also does a press conference after the rate decision, and the wording matters there too. With a line or two, he might give the markets a push, support them, and steer them in the right direction.
But this week we've got more on the calendar besides Kevin Warsh being sworn in on Friday. Tomorrow we get Nvidia earnings again. And for us, that's tomorrow evening after the close. For crypto, it's kind of whatever since it trades 24/7. But even there, these numbers are basically treated like economic data now. Because if the big chip and AI giant stumbles, the whole tech concentration story could flip pretty fast. So yeah, expectations are, as always, insanely high. Same question as always, can they top it again? Either way, we'll know tomorrow night.
Yeah, but if the best performers like Nvidia start to wobble, people pull their money and maybe rotate into other markets, like the broader stuff. Where crypto kind of sits, that's the hope.
I'm really curious what Nvidia says tomorrow night, what the guidance looks like, and how hyped the very top of tech still really is. And we've also seen all the negative effects I mentioned earlier, like prices rising because of the Iran conflict. Of course, everyone hopes this conflict, this war, which obviously has victims, doesn't end up rocking the global economy too. We even covered it yesterday on our Crypto Insights channel. You'd already said with me that things are starting to come to a head. The US is watching, nothing is moving in the negotiations right now, and you figured the US government won't tolerate this much longer. Last night, Donald Trump posted that there was actually supposed to be an attack on Iran today, Tuesday. A military strike. It got called off because several Gulf states asked him to negotiate. Trump's words were, "It's about serious negotiations now." We've heard that a few times, but it really is time to get serious and wrap this whole thing up. Then we could probably recapture 80,000 pretty quickly. But let's also look at the US indexes. The Nasdaq has had 2 weak days. And like my colleague Martin Weiss said this morning, you can't really call that a streak yet. We'd been seeing all-time highs non-stop. You said you wanted a correction, so the question now is this the correction you were hoping for, or could this already be the start of a rollover?
Yeah, I wanted a correction because the move up from down here has basically been a straight line. There really hasn't been any correction in there yet. It's all moving way too fast, way too steep. At some point, you need a sensible, let's say, controlled correction. We're not talking about a crash off some insanely bad headline. It's just that prices have gotten overheated. Investors go, I've made enough for now. I'll take some off the table and wait for better entry levels. And that's how you get a healthy, controlled correction. And that's exactly what I'd like to see. With the Nasdaq, like you can see here, we had Monday, Wednesday, and Thursday. Thursday was the peak, the last all-time high. Then we corrected on Friday and it dropped again yesterday, Monday. So now we've got 2 red days in a row. We'll see how it develops, but this could be a first sign. The Nasdaq actually comes down into this area here. I don't know, maybe toward 27,000, maybe even a bit lower in a controlled way. And then from here kicks off the final push higher. The Nasdaq and the S&P are moving in lockstep. The S&P hit all-time highs last week on Monday, Wednesday, and Thursday. And we'll see maybe Nvidia's numbers are the thing that kicks it off. Some profit taking or even bad news. That makes this pullback, I'll say it again, happen in a controlled way before we push into that final leg up, into the 27 to 30,000 zone. We already pushed pretty far into that area above 29,000. But if we get a dip, I can see there still being enough room for 30,000 for one last parabolic run. You can also see it on the RSI. It's still overheated. So we're still way up here, and a little cool down before it heads higher again would actually be pretty healthy right now. That's what I'd like to see, and I can totally imagine that playing out over the next few days. It'd be great if it goes that way. We'll see how it develops.
So what makes you think or hope this is a controlled correction and not the rollover already? How do you spot the difference?
No, with a rollover, we print a final all-time high, and then it drops. And the moment it bounces out of this correction, it doesn't go on to make another higher high. It puts in a lower high, and from there it rolls over. And then you'll see that this low might actually get undercut. And by then at the latest, you know you've got to be careful. A rollover is very likely.
So you're not ruling out that it could already happen now before we even get to 30,000?
It could totally be that this just keeps running, really rockets higher, and then we get a correction. And out of that correction, the last all-time high just doesn't get hit again. And yeah, we've seen that plenty of times. I'm thinking of the dot-com bubble bursting. That was the same story. It shot up to an all-time high on the Nasdaq, then everything dropped and you got a correction. But that correction move never made it back toward the all-time high. And that's a pretty clear sign that a rollover is very likely. That's the point where if you didn't get out up here, you at least take your exit right here. And that's also the moment, like we'll talk about a few times today, when money rotates out of the top performers driving this move and into the broader market. And that's the phase where basically cryptos rustle. Names across the board have a chance to move up because that's when liquidity finally flows their way.
Liquidity spreading out is a great cue for the next chart. The Russell, it's up too, but not with the same push we saw in the Nasdaq and S&P. And yeah, it's a bit like crypto since you've got more smaller, riskier companies in there. With the Russell, we'd already seen a more noticeable correction.
Yeah, it's a bigger correction compared to the Nasdaq, but
Yeah.
on its own, looking at it in isolation, it's not really a major correction yet. We've seen this move up here, that's what we've always wanted, along with the idea that liquidity has to reach the broader market. And with this move up, you can say, yeah, it showed up, but liquidity, like I've said a few times now, goes where the best performers are, and right now those are in the Nasdaq and the S&P, not broadly in the Russell. So the Russell, including our crypto, is fighting for liquidity against the top performers in the Nasdaq and S&P. Where's that liquidity gonna go? And the moment liquidity rotates out of the top performers and into the broader market, that's when we'll see the top in the Russell and in crypto, not before. And that's what we've got to watch now. In the Russell, the RSI has already dropped a lot more than in the Nasdaq, and you can see it from last Friday too. That was a real bloodbath. I mean, it was down like 2.6%. And I can totally see that along with the Nasdaq, if this is a controlled correction, it keeps drifting lower, which isn't a bad thing. Corrections are totally normal on the way up, before the Nasdaq takes off again, parabolic, and then with this rotation, a bit later, the Russell and cryptos catch up. But that rotation is a key part of getting the breadth we want. Still, Johanna, the rollover we always talk about is, in my view, clearly in sight. We're talking just a few months. The reasons for that? Rollover we've explained a bunch of times in the last two videos. It's the structural gap, US markets, meaning our US indexes and the stocks behind them that are printing all-time highs on one side, and the real economy with consumers right now struggling just to get by on the other. That divergence is going to rip at some point, and then it'll flip. Saying in favor of is kind of a bad way to put it, but it's tilting toward the economy, and that's when we start heading into recession. And that's it. Those are all classic behaviors, parabolic moves, markets and the real economy drifting apart, all typical patterns for the late stage of a big cycle. And the end of a big cycle is basically the rollover, and I think we'll be able to watch that happen pretty soon. And you just asked how it could play out. No new all-time high, instead a correction, and after that correction comes a lower high.
Correction is a great keyword to take a closer look at Bitcoin. The fight over $80,000 kind of backfired at first. What are you expecting now? Like I said, by the end of last week, last Friday, it slipped under 80,000. We've also been well above it, and you can see it in crypto insights too. People get into it when the tension ramps up again. Here we go. Patience finally pays off. And then we got that nasty pullback again last week, and the correction kept going. The big question, of course, is how far can this correction go?
Yeah, that's the key question. Here's Bitcoin on the daily chart with its all-time high on October 6th at 126,000. First leg down here, then over. Second leg down here, and the lower low we've put in so far is around 61,100 on Bitfinex. On other platforms, it's a bit under 60,000, and since then we've been moving for 102 days. Moving to the right with a slight climb, and that slight climb is of course shown by higher highs and higher lows. A small uptrend, a tiny uptrend, basically looks the same as a big uptrend in the end, with higher lows and the higher highs. So the move is there, and we've said from the start down here that 80,000 and 90,000 are key levels. And 80,000 has been tapped now. We always talk about that area around 80,000. In our channel, we've dialed it in a bit more. It's this green highlighted zone between 78,500 and 82,500. Price hung out in that range for 11 days, tagged 82.5 a few times, was even a little above it, almost up to 83,000. And like you said, the first push at that wall,
it held.
Yeah, the wall held and it got rejected. We've had a few red days in a row, and that's basically just a small correction. Catching its breath, getting set, seeing what's there, bringing in buyers, and then taking another shot. So I don't think that was the last try at the wall around 80,000. The question now is, how far does it correct on the way down? It's already hit the first support area, around 76,000. You can see it here. This used to be a resistance, and it could turn into support now. And it's been sitting on that support for 2 days, so since yesterday and today too. And maybe that's the base for another push. It might get pushed back again just to take off after that. That's what a setup like that can look like. But it could also be bad news, bad conditions. We're always talking about escalation. The NASDAQ correction isn't really controlled, it's more like a crash. Then it's totally possible we drop further. And that's why we've always kept both paths on the table. The move down to a max of 60,000, so down here, that path is there. And if things get worse, that's an option too, even below 60,000 into the upper 50,000s. That's possible too. Although right now I'm leaning toward that other scenario, I can totally see Bitcoin being strong enough here. Correction, new try, correction, and then taking off. But it wouldn't be a disaster if it slips back into that zone again. Then this trend here, with the higher highs and higher lows, would be broken a bit, and then you'd have to try again for the breakout to the upside from a lower level. The path up is pretty clear. It's the area around 80,000. You've got to take that resistance. There's just no way around it. Didn't work on the first try, maybe the second or third will. And we're in a relief rally. The huge CME gap, by far the biggest ever, up around 84,000 at the top end, still hasn't been filled. Then we've got the 100 and the 50, and after that we're getting into the retracement area. So it'll be interesting to see over the next few days whether support around 76,000 holds. If it drops below 75,000, basically this zone right here, then we'll have to see. You could definitely be looking at more downside, all the way down to 60,000, but we'll see how it develops over the next few days. Other than that, aside from this spillover from the US index world, this thing where the top performers in the NASDAQ and S&P are sucking up all the money, especially the AI names. AI names, if they stop doing so well, then the liquidity moves somewhere else. And then maybe Bitcoin and our altcoins and even the Russell names get their shot too. Then the move spreads out, and when it spreads out, we know the end is close.
To keep it from sounding too dramatic, let's look at Bitcoin on the weekly chart. Even though last week at least was deep red, down 6%. We also started this week in the red. And you've brought the two indicators we want to look at on the weekly chart, the RSI and the MACD. A 6% drop in a week is a loss for Bitcoin too, at least if you were hoping for an uptrend.
Yeah. If you want to put it that way. Also, I mean, in soccer you don't just score, you might give up a goal too. And yeah, we've had a bunch of green weeks in a row, which also pushed the RSI up. Then last week we got a red week. This week's starting out red too. We'll have to see how it plays out over the week. But you can definitely say what's always been an important level is Bitcoin is still under the 200. Weak SMA 200, it's still holding above it for sure. It tapped it and hasn't dropped below, which is actually not a clear sign we keep going down. So that line held for now. And we know our RSI has moved above that trend line, which is a good thing. Meaning price and momentum are moving in the same direction. That's really positive. Long term, Joanna, everything points to this rollover because the long-term uptrend is totally at odds. With those falling RSI peaks, that's a divergence that'll eventually resolve in that rollover, but before that you can assume we've got a bit more upside because there's still room up to that red line. So the weekly SMA 200 and the RSI both suggest we're in a bottoming phase here, and that wouldn't be bad because if that was the top on October 6th, then we've got the bear market bottoming out, and then it can start heading up. Question is, how far? How far and for how long?
You've brought up RSI a few times now. What about MACD as an indicator?
Yeah, the MACD, I'd like to dig into that a bit more because we always have it on the chart, but we kind of treat it like an afterthought. You can see on this move up, the blue and the black line are basically always above the zero line. And that means the bigger trend, when those two lines, the black one is the MACD line and the blue one is the signal line. When they're above zero, we're in a big bullish trend. So the flip side is, if we're below that zero line, which we are right now, and that's the move down, then we're in a big bearish trend. Emphasis on big trend. If you look at the histogram, you can see both lines are below zero, so the overall trend is bearish, but the histogram is showing green bars. That means short term, inside that bigger trend, short term, you're getting bullish signals. And when the MACD line and the signal line are below zero and the histogram is green, that combo points to a bottom forming, a trend reversal. And you can see that really clearly here. The two lines will start moving up, go through the zero line, and if they can pull that off, it could kick off a longer-term positive trend, and the green histogram will make sure the short-term trend, and the other way around, it flips from bearish to bullish. You can see it really clearly here, and it's actually a pretty solid indicator. The MACD, especially with the two lines and the histogram set up like this, suggests we're in a bottoming phase and a trend reversal, which is pretty positive. And what I can totally see happening, and that's why I drew these purple arrows, is something like this. We move over here, get a quick pullback like you can see, and it stays green to green. And that's basically it. Before we roll over into the red zone, and the two signal lines, or the MACD lines, shift from the upper area back down into the lower area. So yeah, the MACD too, if you look a bit closer at how the different pieces work together, points to us being in a bottoming area and in a trend reversal from a longer term bearish move into a potentially longer term bullish trend.
So how are the big players positioning themselves? We've looked at the chart and the RSI and MACD indicators. And how are the big guys acting when it comes to the fundamentals? Like what's going on with the ETF, or how's it been doing lately?
Terrible. Last week was a disaster with 650, with $1 billion in outflows. That's not small. And on top of that, just yesterday, Monday alone, we had 650 million in outflows, and out of that 650 million, 450 went to BlackRock.
Attributable?
attributable. I mean, those are some pretty big numbers you've got to let sink in first. For how negative those numbers were, Bitcoin actually held up pretty well last week, battling it out around the 80,000 level, probably because while some are selling, others are buying. In that same stretch, basically last week, Strategy bought a whopping $2 billion worth. So yeah, one sells, the other buys, and you end up with a pretty solid middle ground. And that's, I think, why we did correct, but dropping from 82,000 to 77,000 really isn't anything crazy.
We hadn't been showing Bitcoin on the monthly view for a few weeks, but now after a month you've brought the chart back. Why?
Yeah, we've got these three lines here. The dark line marks the cycle top when you look at the monthly MACD. The red line, the histogram flipping over, is the trend reversal, like we said, from green to red, bullish to bearish. That was the confirmation of a bear market. And then here again, the reversal. A small shift from dark red to light red, kind of a base forming in the bear market. That's how it was.
Up to now.
Last time and the time before that too, and we've drawn those lines in again this time. So we said the dark line is the cycle top. That was right here. The reversal is into the red part of the histogram, confirming the bearish trend, the bearish move, and then back into the light red zone. Like here, kind of a bottoming in a bear market. And you can see it really clearly, Johanna. Unlike my other charts that are usually logarithmic, this one's linear, so you can see the spikes better. The bigger picture, if you look at this and carry over what we said on the last page, is the two lines, the MACD and the signal line, are above the zero line this time. That means overall we're still in a totally bullish trend. Even though the lines are drifting down, they're still above it. But the flip from green to red has already happened. Still, that flip, shown by the histogram swinging over, is a bit weaker because we're not in dark red anymore, we're in light red. So if you go one level up to the monthly view, we're basically still in a totally bullish move, with the possibility of a trend reversal that might not get confirmed because we could move back into the green zone pretty quickly. And the two lines, the MACD and the signal line, may stay above the zero line. So back then, the monthly view was signaling to us that right here at this point, the bearish trend is kicking off, and maybe that's why I brought it up. You can see here that the reversal is there, back toward a bullish move.
Last week on the channel, we also talked about the progress on the Clarity Act. Last Thursday, some dads or even non-dads might have been out in the woods pulling a little wagon around. But over in the US, they were in session on the Clarity Act, and the Senate Banking Committee waved it through. That's pretty positive news, even if it didn't exactly send prices through the roof. So what happens next?
For an hour or two, it did push prices up when the Senate Banking Committee gave the green light last week. That's a huge hurdle. But then it cooled off again. The Clarity Act is a really big deal, and there are some pretty big names are saying it might be the most important thing for the crypto market. It's absolutely a big one. The Senate Banking Committee has already given it the go-ahead, and the Senate Agriculture Committee gave it the go-ahead months ago. So those are two committees in the Senate and now their versions have to be lined up, meaning what got approved in agriculture and what got approved in banking now has to be synced up. And then that synced up document goes to a vote in the full Senate, since those were only committees within the Senate.
Mm-hmm.
And once the full Senate votes for the Clarity Act, they'll merge it with the House version. The House already voted on this Clarity Act pretty early, around mid last year, and gave it the green light. And we all know Congress is made up of the Senate and the House. So first it gets lined up in the Senate, then they line it up with the House. So after that, it's not really votes anymore. The one last vote still coming is in the Senate, the whole Senate. And once that's all done, it goes to the president, and he's already said, I want to sign it as fast as possible. So getting the go-ahead in the Senate Banking Committee was a huge hurdle cleared. Agriculture already gave the go-ahead. Now it basically just has to be synced up. And the next big hurdle, the final one, is the vote in the full Senate.
Die Abstimmung im vollen Senat.
What kind of timeline are we talking about?
Well, it has to get done sometime. In June, and honestly, you could even say July, because July 4th, Independence Day, would be a nice date they've talked about for the president to sign it. So yeah, this is kind of a big deal. The financial market is supposed to get modernized with something like the Clarity Act. I'm curious if they can actually get it across the finish line, but if they do, it's a total milestone for us in the crypto scene, and maybe, just maybe, they'll add a little more on top of it. There's this line that Bitcoin has never had 3 green months in a row in a bear market.
Mm-hmm.
A lot of people are saying this is the bear market, from October down to that low around 60,000. And if this really is the bear market, and it could still drop further, since some are even saying it'll fall to 30,000 or 40,000. In March, we were up 1.87%. In April, we were up 11.85%. And in May, we're just barely at 0.68% right now. So if May ends up positive too, then you really have to ask yourself, if you want to follow this rule here, also in terms of this signal and how you read the MACD, are we in the uptrend? Was that a bigger correction? And do we then maybe even keep going from here? And that puts us right back at our continuation rally, which I still haven't ruled out. And with this MACD in mind, it actually doesn't look that bad.
This time we've got Ethereum and XRP again for the altcoins. Let's start with Ethereum, but now it's pushing up against that $2,000 level from above.
Yeah, that's you can see the move here. That was Bitcoin's all-time high, and that was the all-time high for ETH. So ETH led Bitcoin, which is totally unusual. Normally the alts are always behind Bitcoin, and those kinds of structures are why I never assumed this could be Bitcoin's final all-time high, because this time everything was different, which can happen. It doesn't always have to look the same. Then we saw the drop, the sideways chop, another drop. That was the point where Bitcoin hit 60,000, and since then this has been trending sideways to slightly up as well. I drew in this green line here, kind of a trend line, and you can see we're basically sitting right on it right now. And I'm assuming, and that was the thumbnail of our last video, it's really just a matter of days, 5 days, 10 days, 15 days, until something happens here. And ideally, it moves up. Worst case, if Bitcoin loses that 76K area, dips under 75, makes a new lower low, then it drops further, and exactly what you said happens. We'll probably run through 2,000 from top to bottom. And then we hit a pretty strong support. That comes from further left. And we had the weekly chart up last week. so you can look at it there in detail. Pretty strong support around 15 bucks. So if it heads down, that's the kind of thing you'd want to be ready for. Otherwise, we wait and see what Bitcoin does, and ETH follows along, but it's getting tight, the situation's tightening up.
We just talked about Bitcoin and how the ETF had massive outflows last week. What's it look like for the ETH ETFs and XRP too?
Yeah, ETH is the same. Last week, 250 million outflow. Every day last week was an outflow day. It was all red. Meanwhile, Bitmain, together with Tom Lee, bought 450 million. So while strategy more than offset the outflows in the spot Bitcoin ETFs, Bitmain can't do that for ETH. So yeah, the two big ones are selling right now, unlike the spot XRP ETF, which had a 60 million inflow last week. Every day last week was green. And last week was the strongest week in 2026. So yeah, it can be that contradictory. Bitcoin with a billion outflow and XRP with the strongest week of 2026. You can already see where some of the money's going.
Let's take a closer look at the XRP chart too. Right now it really looks like a breakout, especially with this triangle here.
Yeah, I'm not really a fan of those triangles or other setups, like a falling wedge and all the ways people can draw that stuff in. But I still went ahead and mapped it out because it was pretty obvious. And you can see up here at the tip. And like I said with ETH, we're right on the edge. We got that break upward. That was the day of the Clarity Act. And people are saying a coin that's going to benefit big time from the Clarity Act, even though it's already labeled a commodity, is going to be XRP. And XRP did get a nice push upward. But it was kind of clear that with these triangles, if they break down, they go up first and then down. And if they break up, they go down first and then up. Just to mess with retail, to trick the average investor. And now we're up here at the tip, at a similarly critical spot like Ethereum, like Bitcoin too, which is right around 76,000 bucks and really shouldn't drop below that. Then we'll see how these three, unfortunately tied together in this crypto market, all move up together or go down.
You got to say it out loud.
Let me say it.
You just went quiet, but you did say it. We've noticed in our Crypto Insights Telegram channel that this question keeps popping up lately. How does it make sense that there's so much fundamentally positive news, the Clarity Act and all that, the buying, and yet the price still isn't breaking out? What stands out is when it moves up, then most people kind of quietly cheer or are happy with the performance, which is totally fair. But when it goes down, the doubts, skepticism, and impatience kick in, also fair. Still, the question of how everything can look positive fundamentally, and yet there's no breakout, is absolutely valid.
Yeah. We just had great news last week with ETH and with XRP too. Also, XRP, together with JP Morgan, Ondo, and MasterCard, rolled out a reference implementation and showed how it can be done. And we've got a pretty big XRP community, and the news around Ripple Labs and XRP has been really good, same as with other coins. So the headlines are great, and the actual business side, if you want to call it that, is great.
Super.
But when you look at the price action, you're like, how does that fit together? And all I can really tell everyone is this. There's that story about Costolani's dog. Not literally Costolani's dog, he just used it as an example. He said the business is the owner, and the price is the dog. So there are phases where the price kind of lags behind the actual business. Like an owner walking a dog on a leash, and the dog is trotting along behind because it's still sniffing around. That's exactly where we are right now. The actual business is solid. It's running. It's moving forward. Clarity Act, utilities, rollouts, reference installs. Crypto is getting more and more important. All of that is great. The business is doing well, but prices in Bitcoin, ETH, XRP, and a lot of other altcoins are basically trailing behind. And at some point, there'll be a phase where the dog's done sniffing, then it runs up front, passes the owner, and we get into that phase where the price just runs ahead of the actual business and the core business. And that can happen, for example, right before a bubble pops, like we saw with telecom and internet stocks in 2000, 2001, or maybe now with AI stocks, where company valuations are so high and just don't match what the business is doing today. Basically, price and the operating business are two different things. They don't move in sync. So you've just got to remember that. Even if there's good news, it doesn't automatically mean the price. It says that the dog is right at heel. It's either out in front or lagging behind. That's the right way to think about it, and it helps you deal with this situation mentally. Yeah, coins are solid, business is solid, the crypto market's solid too, but prices are kind of still on a leash right now. Hopefully they'll break loose and run soon.
How you mentally deal with the fact that even with all the fresh hype in an uptrend, you still get pullbacks. That's what we want to talk about too. We've got no real plan today. Nothing's changed on that front. For now, everything's still on track. But corrections are obviously a topic because they can really weigh on you, and we need to talk about them. We saw it, I said it earlier, even at the start, everyone was basically relieved, okay, the worst is behind us, now we're back on a better path up. And we hoped that $80,000 would hold. It didn't. You're saying we might be or are in a so-called relief rally, but there are still these pullbacks you have to sit through. How do we put that in perspective?
Yeah, because if you say we're in an up move, that doesn't mean it only goes up. Not day to day, week to week, month to month, just straight up. Corrections are just as much part of an uptrend as the trend itself. So a red candle here and there, or a run of red candles, is just as much part of it as all those green candles that make the up move. And you've got to be clear on one thing, and I'll never get tired of saying it. The crypto market as we know it has been in a massive uptrend since day one. Meaning if you look at Bitcoin from when it started in 2010 to today, he's seeing one big move up. Sure, here and there a little dip, but overall it's just trending up. And that's going to keep going, not exponentially, more like slowing down. And you've got to be aware of that. If you look at the crypto market in really broad strokes, we're still in a huge uptrend, and that'll keep going for a few more years. Within that big uptrend, you've also got to be clear on that, whether you like it or not. We're going to have smaller corrections in there, like we're seeing with Bitcoin right now. It couldn't clear 83, couldn't clear 84, 85 didn't punch through to 90, and it drops back down into the 76 area. That pullback and retesting support is totally normal. It's no reason to freeze up and go, oh my God, everything's crashing. But if you've had 4 or 5 good days, or maybe even 10 good days, then you're going to have 3 or 4 bad days too. The world's not ending. You've got to be able to sit through these corrections, and you shouldn't lose your nerve. So on days like that, you just don't look at it as much, but you know there are certain support levels it'll drop to, and from there it keeps going. And of course, besides the small corrections, those are like those little needle pricks. With a move up like that, you naturally also get the big pullbacks. I mean, if it's about bubbles just need to be popped every now and then, there's no way around it. Telecom, the internet, and an AI bubble's gonna pop too. No doubt about it. Those bubbles have to get wiped out, and that clears the way for a healthy long-term uptrend. It's like a dog that ran out ahead. You've got to tug it back on the leash. So the business and the price line up again, and investors get a sensible entry point. So yeah, big corrections are part of an uptrend, and we saw big ones in the Nasdaq in 2000 and 2001, so not that long ago. Then we had the S&P and Dow corrections in 2007 and 2008. We had the COVID crash. It was over pretty fast, and we'll have to accept we'll get another big correction soon. And we'll have to accept that on the way to the final all-time highs, we'll see plenty of smaller pullbacks too, like we're seeing now in Bitcoin, in altcoins, and I expect in the Nasdaq and S&P. As well, the US indexes, pullbacks are part of it. They're normal, and in a correction you shouldn't hold your breath, just breathe and tell yourself, I'll get through this, I'll ride it out, and then we keep going. And to be fair, the same is true on the way down too. In a full-on bear market, you'll naturally get bounces upward as well. They don't last any longer than the pullbacks to the downside when we're talking about an up move, but pullbacks come on, they're part of it. And I included this because I keep getting the same questions a lot, especially during pullback phases. Is it over now? Is the world ending? No, that's totally normal.
I had to chuckle when you said the recent past, and that recent past was the year 2000. 2000 was 26 years ago, just saying. That was when I got my high school diploma in the recent past. When you say it like that, it sounds pretty great. So what did you do back in that recent past?
In 2001, I started my second company right in the middle of the crisis, and yeah, that was no fun.
I can imagine.
Then in 2006, 07, I took it public, and things got somewhat back to normal. That was the second to last IPO before the big crash. And so yeah, these pullbacks are part of it. You have to live through them. But the key is, even if you don't manage to get out during a pullback for whatever reason, because you don't want to or you just can't, this is the crucial line. In crypto, we're still in a huge uptrend, a massive uptrend. We haven't hit the ceiling yet. And I think with the next big bull market, we're all going to have a lot of fun again before this uptrend slowly levels off. And like the internet and telecom, crypto turns into a commodity. But this phase, from here to here, we've still got to go along for the ride.
Bottom line, we'll always keep you up to date. We'll be back here next Tuesday, take a look at what's happened and really try to get a quick glimpse of what's next for Bitcoin and altcoins. Oliver, thanks a lot for today. All right, everyone, we'll be back next Tuesday with the news, the charts, and hopefully a soon-to-come agreement in the Middle East conflict that could give the markets a boost. Take care. See you then.